What's the secret behind Brookfield's impressive ability to amass a staggering $16 billion for their latest real estate fund? Welcome to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. Let's get right to it. Brookfield, the asset management giant, has successfully raised over $16 billion for its latest real estate fund, marking a significant milestone. According to Law 360 Real Estate Authority, the fund accumulated $6 billion in just the last quarter alone, signaling robust investor confidence and interest. This new fund is poised to become one of Brookfield's largest yet, showcasing the firm's strong foothold in the real estate market. While this news is making waves across the globe, it also has implications for markets closer to home, such as Kitchener-Waterloo, London, and Cambridge in Ontario. Investors in these areas could be inspired by Brookfield's success, potentially leading to increased interest and investment in local multifamily properties and other commercial opportunities. In comparison, the United States also sees similar trends, with large funds being raised for real estate investments. The cross-border relevance of such developments highlights the growing interconnectedness of real estate markets worldwide, encouraging investors to explore opportunities both domestically and internationally. In a significant development, Amazon's head of global real estate, Shannon Loew, is set to depart from the company as Amazon continues its expansion of office spaces in major cities. According to Jonathan Lehrfeld from CoStar News, Loew has been overseeing a vast workplace portfolio of 65 million square feet across 70 countries. Amazon announced that Loew will be leaving to pursue other opportunities, though no specific departure date has been provided yet. Loew's departure comes at a pivotal time as Amazon plans to expand its offices in New York and other markets, following the company's decision to call corporate workers back to the office 5 days a week. This move highlights Amazon's commitment to expanding its physical footprint to accommodate its workforce effectively. Shannon Loew, who joined Amazon in early 2023, played a crucial role in managing Amazon's corporate office portfolio. His responsibilities included overseeing a significant portion of Amazon's real estate assets, which are vital to the company's operations. Loew's insights on the Leading Voices in Real Estate podcast emphasized the unique challenges of managing real estate within a tech company, where rapid strategic shifts are often required. Amazon's recent acquisition of a Midtown Manhattan office property, its first since 2020, reflects the company's strategic efforts to increase its office space in key locations. This acquisition, situated near Grand Central Terminal and Amazon's flagship campus, is part of a broader strategy to enhance its capacity for accommodating employees. Furthermore, Amazon has announced plans to triple its network of distribution hubs in rural United States markets, aiming to expedite deliveries amidst rising consumer prices and tariff uncertainties. This expansion, expected to create 100,000 jobs, underscores Amazon's strategic focus on scaling its logistics capabilities. As Amazon navigates these expansions, the departure of a key figure like Shannon Loew marks a significant moment for the company. The challenge now lies in finding a successor who can continue to drive Amazon's ambitious real estate strategies forward. In a notable transaction reported by Justin Sayers from the Austin Business Journal, a Denver-based company has made significant strides in the data center industry by acquiring more than 1,500 acres in Uland, a small town in Texas. This acquisition marks a major development for the area, as the company plans to establish a data center campus on the expansive site. The move reflects the growing demand for data centers, driven by the increasing need for data storage and processing capabilities. This strategic purchase positions the Denver company to meet these demands effectively, while also contributing to the economic development of Uland. The planned data center campus is expected to bring jobs and infrastructure improvements to the region, enhancing its appeal as a hub for technological advancement. Comparatively, similar trends can be observed in the Kitchener-Waterloo, London, and Cambridge areas of Ontario, where there is a burgeoning interest in industrial and data center developments. This cross-border parallel highlights the global nature of the data center market as companies seek strategic locations that offer both space and connectivity to support their operations. In the United States, the acquisition in Uland mirrors the broader trend of expanding data center infrastructures to accommodate the digital needs of businesses and consumers. This development underscores the interconnectedness of real estate markets, with companies on both sides of the border actively pursuing opportunities that align with the digital transformation era. Rite Aid's recent filing for its second chapter 11 bankruptcy has resulted in a substantial number of its stores in New York City being put up for sale. According to Tim Schooley, 36 stores are now on the market, offering a unique opportunity for investors and developers interested in acquiring retail spaces in one of the most dynamic cities in the world. This development follows Rite Aid's ongoing efforts to restructure its business operations amidst financial challenges. For those familiar with the retail sector, this situation presents both challenges and opportunities. The availability of 36 stores in a single market is significant, potentially attracting interest from a variety of commercial real estate investors looking to capitalize on prime locations. The impact of Rite Aid's decision extends beyond just the New York City market. In regions like Kitchener-Waterloo, London, and Cambridge in Ontario, there is a growing interest in retail space as businesses seek to expand their footprint in strategic locations. The availability of multiple retail properties in a concentrated area can stimulate similar interest from investors in these Canadian markets, as they look to replicate the success seen in major urban centers. In the United States, this trend of retail opportunities being made available due to business restructuring is not limited to Rite Aid. Other companies facing financial pressures may also consider similar strategies, resulting in a dynamic retail real estate market. This cross-border observation highlights the interconnected nature of commercial real estate markets, where developments in one region can inspire similar trends elsewhere. As we continue to monitor the situation, the sale of these Rite Aid stores will likely be watched closely by both local and international investors. The outcome will provide valuable insights into the current state of the retail real estate market and may set precedents for future transactions involving large-scale retail property portfolios. In another notable transaction in the commercial real estate market, a downtown San Francisco office building has recently been sold at a significantly discounted rate. According to Rachel Shire from CoStar News, Sansom Street Advisors have acquired the property located at 799 Market Street, a longtime home of Ross Dress for less than a third of its sale price a decade ago. This transaction highlights the ongoing trend of investors capitalizing on reduced prices in San Francisco's commercial real estate sector, which has been struggling post-pandemic. This particular sale underscores a broader pattern in the market, where commercial properties are being sold at prices significantly lower than their pre-pandemic values. Such developments provide opportunities for investors who are keen to enter the market at a lower cost, potentially revitalizing these properties with new tenants and business ventures. When we look at similar trends in the Canadian market, specifically in areas like Kitchener-Waterloo, London, and Cambridge in Ontario, the demand for office spaces remains robust. However, the pricing dynamics differ as these regions have not seen the same level of price depreciation as observed in San Francisco. This contrast highlights the varying impacts of the pandemic on different real estate markets and the opportunities they present for investors on both sides of the border. In the United States, the San Francisco transaction is part of a larger narrative where office buildings in urban centers are being reevaluated and repositioned to attract new types of tenants, particularly those in tech and innovation sectors. This strategic shift is being mirrored in Canadian urban centers, where office spaces are being adapted to meet the evolving needs of businesses in a post-pandemic world. The sale of 799 Market Street not only provides insight into the current state of San Francisco's real estate market, but also serves as a barometer for potential shifts in investment strategies. Investors are likely to continue seeking out discounted properties with the aim of transforming them into profitable ventures, a trend that could influence real estate markets globally. Thank you for listening to the Commercial Real Estate Insights podcast. I'm your host, Steve Halmoon. See you on the next one.